Hello guys, this is Best Forte, your Forte in investment. Our mission is to produce achievable, affordable courses and a custom guidance. We will be introducing a few option stocks with news or movement or recommendations from other websites, and we will walk through technical and fundamental analysis of each stocks. Not necessarily the high profile stocks like Apple or Google. We will also be looking at mid-cap stocks that has enough movement for options contract to have any premium. For today, we are going to touch on two stocks that a website is recommending. Let's take a look. First off is the Take-Two Interactive. Looking at the website, first look, the homepage is of course the introduction of what is their recent game development. And famous game is of course the Grand Theft Auto, which for me, because I've immersed into the game and it brings really the 3D world into our mind. Okay, and also of course recently the company signed with the NBA to develop the games for them, and that's why there's a NBA series, and the license amount to 1.1 billion. Some of the famous games, Red Dead Redemption, Mafia series. Looking at the fundamentals, the price for this stock is 162 per share, and if we are looking at the options contract, it will be quite expensive because for 100 shares it will stand at $16,200 USD, and if you have the cash you can really look into this. Okay, looking at the earnings per share is currently 3.54, very impressive. Current ratio is 1.70. Total debt to equity is 6.98. Interest coverage is 161. Pretty impressive. The only thing is the P ratio is on the high side, 41.75 to our standard. But overall, I think it's a pretty good stock. And of course, looking at the free cash flow is at 632 million, which I think there's a lot of buffer for them. So looking at the technical analysis, looking at the trend now, it's on the high side since February or March. Okay, February is the time where the pandemics hit, and it really didn't fall a lot, probably 10 to 15% down. Okay, but you gradually go up since April, and recently after this earnings report it's hit the peak at 180. So now this is the new resistance, and then now hit at the consolidation here, and the new support is 152. If you are looking at to buy this stock, you can sell the put here 152, and if you have this stock you can sell the call here and around here 176, 177. But of course you have to have the cash if you want to sell put. 15,000 to sell the put, because in case this stock really crash down and you are being assigned, you have to pay this cash for this stock. And remember that the option is 100 shares per contract. You will have to pay the price for 100 shares. But if you think that this stock will rally a lot, you can also buy call here. Or if you think that this stock will plunge further, you can buy the put here. Okay, it's entirely up to you. And again, this is our opinion and perspective, and you should do your own studies and analyze your own risks. Just a brief introduction of what options is about. So a call option gives the buyer the right to buy 100 shares at the strike price before a expiration date. Likewise, the seller of the call option is obligated to sell the stock at the strike price if the option is exercised. A put option gives the buyer the right to sell 100 shares at the strike price before the expiration date. Likewise, the seller of the put option is obligated to purchase the stock at the strike price if exercised. So we will go through a simple illustration of what is buy call, sell call, buy put, sell put. So let's say a company ABC now trades at $100. You buy a call option at strike price of $105 at a premium of 10 cents expiring in 30 days. It will cost you $10 upfront. So before the end of 30 days, the share price hit $110. The buyer can choose to exercise the call option to buy 100 shares at $105. So the cost for him will be $10,500 and the total cost will be additional $10, which is $10,510 because of the premium you paid upfront for the options contract. So if he chooses to sell the stock at $110, he will receive $11,000 and for the whole trade he will profit $490. So for sell call options, if you sell the call option at a strike price of $105 at the premium of 10 cents expiring in 30 days, you will receive $10 upfront. And then at the end of 30 days, if the share price doesn't hit $105, the options contract expires worthless, and so you will keep the $10. For buying of the put options, if you buy a put option at a strike price of $95 at a premium of 10 cents expiring in 30 days, you will have to pay $10 upfront. Then, before the end of 30 days, the share price hit $90. The buyer execute the put option to sell 100 shares at $95. So, the buyer will receive the value of $9,500. And then, you will have to buy back the share price at $90 and it will cost you $9,000, and actually with the whole trade you will end up $490 because of the $10 premium upfront. So for sell put options, if you sell the put option at a strike price of $95 at a premium of 10 cents expiring in 30 days, you will actually receive $10 upfront. Then, at the end of 30 days, the share price doesn't hit $95, the option contract expires worthless, and you will get to keep the $10. Of course, we didn't cover the scenario of how it can lose money. But if you are interested to know more, you can contact us at the information below the video. We hope that you have a brief understanding of what options for now. Okay, up next, Activision Blizzard. Okay. So at the homepage, of course, the introduction of their games here is the continuous movement of what they have been doing and the recent development. Because of their interactive games like Candy Crush, Call of Duty, World of Warcraft and Overwatch, which I think they allow people to interact with one another. And of course their famous game is Diablo. Diablo 3 of course is a hit and everybody was anticipating that. Of course you can still look at the development of their upcoming games here, and of course Candy Crush was one of them. The Candy Crush, I believe most of us would have installed on our mobile or once or twice, and now even Windows 10 have it installed automatically. Okay, you can take a look at yourself for the website for more information. And looking at the fundamentals of the company, the current price is 81 per share, which I think is quite a okay stock. Looking at the 100 shares per contract, I think 8,100 I think is okay if you have the cash, of course. Looking at the earnings per share is 1.95 and current ratio 2.5. Total debt to equity is 23.02. Interest coverage is 18.89. Is all meet our mark. Of course, the only concern of again is the price to equity, a bit on the high side, 34.63. But I think it's still a very good stock because looking at the free cash flow, it stands at 1.72 billion, which I think they won't really have any problem even during this pandemic. So looking at the technical analysis, is code symbol is ATBI. And again, the same trend seems to happen for the blizzard here. And looking at the trend since this year, it also didn't really being hit by the pandemic. And of course, there's a $15 downtrend here between February and March, and since then it continues to rise, and now the new resistance here is now 87, around 87, and the new support is around 76, 75. Of course, if you want to have this stock and don't feel that this stock worth 81, you can sell the naked put here, or if you have this stock, you can sell the call here. But if you think that this stock will continue to rally a lot, you can buy a call around 87. Or if you think that this stock will plunge, you can buy a put here, 75. The decision is entirely up to you. Again, this is our opinions and perspective, and you should do your own studies, and you should risk only what you can afford. If you like our videos, please press subscribe or like or leave any comments. We would like to hear from you, and we'll see you in the next video.